just feel so unreal, so unreal, so unreal.
Alright, but today is the 24th of March, being a Tuesday, and in relation to the economic calendar, we had high impact news at 9:45 being flash PMI, and I took this trade during the AM session, and we're just going to take a look at it. And as usual, we're going to start the higher time frames, get a grasp of what is currently going on within the market. So not really much to say on the daily time frame other than the fact that, okay, we had Monday's price action delivering into this daily order block right here, deeming this a daily order block because we had the engagement with the SIBI right here, and then series of up close candles, series of down close candles, closure below it. So it's a valid order block. We have that deliverance up into it, and we see that deliverance back down. Taking a look at the hour 4, we have not much here on the hour 4, to be quite honest, as well. We have that deliverance up towards buy side, and then the deliverance down from that daily order block, and price action simply just grinding its way through this large hour 4 imbalance. And then taking a look at the hour 1, what we take a notice of is that, okay, so we have this London standard deviation projection from the previous day's trading, and we have the -2, -2.5 here being utilized for a point of reaccumulation, and this is when we end up having this slow grind back down towards sell side. And as we're grinding down towards sell side, we're engineering highs as we take a notice to the fact that buy side is being left intact. It's being left intact, and that's why I was willing to go on the long side in relation to today's price action, because there was simply just a lot of buy side being left intact, and it's a lot more visible and clearer when we go onto the lower time frames. But as well as the fact that we have the 3 drive pattern here as well. So sell side engage, sell side engage, sell side engage, sell side engage, 3 drive pattern. So that is also very nice to see. So taking a look at the 15-minute here, we can see how buy side is simply just being left intact, which was what I was mentioning just previously before, which is very nice to see. And then we also have a standard deviation projected from yesterday's price action. You have your -2, -2.5, which was utilized as a point of reaccumulation. And this was actually where I was looking to take shorts yesterday. I took shorts on this candle, the 1400 candle. So I took shorts here because I figured that price action was willing to return. I wanted to see price action come down to the equilibrium of this range, and there was also a devil's mark that resided somewhere around here. And we also left these equal lows, and this is a lunch low, but that's yesterday's analysis. But yeah, we have that point of reaccumulation established, and we have that deliverance down towards sell side, engagement with the CE of this M15 imbalance. So from this candle's high all the way up to this, from this candle's high all the way up to this candle's low, your M15 imbalance, projecting it out in time, you have your consequent encroachment right here, and that is where we have the intraday low of the day at the time for that buy side delivery. And then we end up grinding again down towards sell side in a very high resistance manner. And what I really took a notice to was all of this price action right here. Very high resistance price action forming a TLP, and it's very, very nice and attractive to look at in terms of, okay, I know that when price action is going to come up here, it's going to go up here in a very willing fashion to just absolutely displace right through it. It just wants to clean up all of that mess. So yeah, that is essentially it for the higher time frames. When we go in and we take a look at the actual trade now, so zooming out, you can just see all of this buy side right here. It's very, very, engineered highs being left intact. None of these highs are protected. So we have the 9:30 opening being right here. Zoom in a little bit. So we have the 9:30 opening being right here, and what I was looking to see initially was a cracking correlation form with this low, but all assets ended up engaging with it, so there was no valid framework for me to work off of to say, okay, I'm going to look to execute my position off of this now. Since all assets ended up engaging with it, there was no point of inception, as well as the fact that the first presentation is the candle that displaced through this low right here. So I'm simply observing the deliverance down towards sell side, and then we end up coming down and engaging with the lower quadrant of our new week opening gap. So if I'm to just make this a little bit more prominent, the quadrant layered out would be our current new week opening gap. And what we end up seeing is deliverance down to the upper quadrant of that. And what we end up seeing is the deliverance down to the upper quadrant of our new week opening gap, and then we have a retracement back up into the range, engaging with the first presented fair value gap of the AM session. Now, like I mentioned at the start of the video, today we had high impact news at 9:45, which I was aware of. So I'm seeing this retracement back up into the range, and we have the 9:45 candle occurring right here. I wanted to see then this low be engaged with and a cracking correlation present itself. I figured maybe the 9:45 would be the injection of volatility for us to do so, but it wasn't. We simply went up and engaged with the first presented fair value gap. Then we had that retracement down, engaging with the sell side residing at the upper quadrant of the new week opening gap. Now the execution was off of the 5-second time frame, and I was actually I wanted to see, I was gauging how price action was delivering, and I'm going to get into that as to why I decided to collapse the trade where I did collapse the trade. But I did want to see price action just, deliver towards buy side in a meaningful, willingful fashion, but I don't know why I said meaningful, in a willing fashion, but it didn't do so, because as we're seeing this price action deliver towards buy side, what are we noticing? We're not printing imbalances. We're not showing a willingness to deliver towards. We're not showing eagerness to deliver towards. And even so, as of right now, we're consolidating. Price action is not doing much of anything. And where we are consolidating is around the 10 a.m. opening, which is also located around the high of our new week opening gap. And that is something that I took a notice to the moment the 10 a.m. candle printed. The 10 a.m. candle opened, and I said to myself, okay, it's in alignment with our new week opening gap. We may end up seeing a consolidation. And that is what led to me looking to manage the trade the way I did manage the trade, ultimately collapsing it once we engaged with the true day opening. So collapsing the trade just around here. And it was also in alignment with a bunch of the standard deviations that I had projected out in price. Now, I'm going to touch on this very briefly. Yesterday's execution, I had someone say to me they thought that M1 standard deviations hold no power, which is interesting, but M1 standard deviations do hold power, and all standard deviations hold power. Standard deviations are fractal in terms of when we are observing price action. This execution that I took today was off of a 5-second SIBI residing right here. So we had the engagement with this low, and I very much like this because we have the engagement with this low, cracking correlation presented, as well as the fact that this price action is occurring around the upper quadrant of our new week opening gap. So I very much like this. And then we end up having a 5-second change in state and delivery. So we have two forms of a change in state. We have this 5-second change in state and delivery, and then we also have the inversion of this 5-second SIBI, which acts as another change in state and delivery. Reason why being is because when we observe this candle itself, it's the candle that presented our cracking correlation, and it formed an imbalance. But not only the fact that it was the candle that presented the cracking correlation and formed an imbalance, the imbalance was then utilized again to engage with sell side. So the imbalance was utilized as resistance, engaging with sell side right here, and then we had the inversion of it. So now we look for it to be utilized as support, and as well as the fact that all of the other time frames were following suit. So when we take a look at the 15-second, you have that 5-second change in state and delivery right here. It occurs, and then we also have the 15-second continuing that deliverance up towards the buy side, forming a change in state as well, its own respective change in state. And this is what, going back to the topic of like the M1 standard deviation holding no power in price, it would be to say that, oh, a 5-second change in state and delivery has no power in price. In saying this, you're failing to acknowledge that price is fractal. And the best way that I can portray this is like this. This is what I mean when I refer to the fractal nature of price. You have the time frames. So in order to grasp the concept of what it means that price is fractal, and there is a fractal nature to price, as well as standard deviations. Standard deviations are also fractal. You can utilize them in a fractal method as well. But taking a look at this schematic right here, you have the 15-second, and you can also add the 5-second, which would be a smaller circle inside of it. But you have the 15-second, M1, M5, M15, hour 1, hour 4, daily, and then the weekly, and you can also add the monthly if you wanted to. But when I'm observing price action, when I am framing an idea, ideas are always stemmed off of higher time frame. And if the ideas are stemmed off of higher time frame, I'm not going to wait for, let's say the idea is stemming off of the 15-minute chart. I'm not going to wait for a 15-minute standard deviation. A 15-minute change in stay and delivery to present itself for me to execute off of the trade. I can do so. There is absolutely no problem with doing so, but that is me executing off the 15-minute chart, and I don't do that. So when I'm framing the trade for an M15, I'm looking to see signatures on lower time frames that will confirm what I'm looking to see on the M15. And what this is going to look like is, one, for first, you're going to have a change in state on the 5-second, which then flows out into a change in state on the 15, which then flows out to change in state on the M1, which then flows out to either an inversion on the M5 or a change in state on the M5, and so on and so forth. That is essentially the fractal nature of price, and it works the opposite way as well. What you see on the higher time frames will also be replicated on the lower time frames in terms of the structure. You're going to see those types of structures being replicated multiple times on the lower time frames because, well, there's simply just a lot more time for it to occur. So that is essentially the fractal nature of price. You need to imagine it as if you were dropping a rock into a body of water and you see the concentric circles simply just move out. And as they move out, what you take a notice to is that the circles become bigger and bigger and bigger and bigger and bigger and bigger. So yeah, very much straight off topic. A lot there. Can't even remember where I even was, but you had the 5-second SIBI as well as the change in state and delivery that I executed off of, and then I had a 5-second standard deviation projected out in price. Now, when I said that the standard deviations also have a fractal premise to them, it essentially looks like this. 5-second standard deviation has been anchored here. What do we take a notice to? We take a notice to the -2, -2.5 reaccumulating orders. There are principles associated with the standard deviations in terms of, okay, we know that the -2, -2.5 is going to be our point of reaccumulation, redistribution, or a smart money reversal. And we also know that the -4, -4.5 is going to be a point of terminus for a smart money reversal. So this being a 5-second standard deviation, when we come up into this -2, -2.5 standard deviation, what do we notice? We notice that the 15-second chart ends up retracing and engaging with its respective point of inception, residing right here, this change in state and delivery. This also could have been a point that I could have added into the trade, but I simply just decided not to because I didn't want to open myself up to more risk. I liked the way my position was looking. I liked everything in general. So this could have also been a place that you could have added because it's a reaccumulation of orders. So you join in with the reaccumulation of orders and wait for it to redistribute up towards buy side. So the 5-second -2, -2.5 is utilized on the 15-second for its reaccumulation. And then we also have a 15-second standard deviation. So from this high all the way down to its respective low. Its -2, -2.5 is also utilized for a reaccumulation of orders on the M1. It's basically exactly like this. The same way I was mentioning how you're looking for a 5-second change in state to then flow into a 15-second change in state to then flow into an M1 change in state is the exact same premise it holds when it comes to these standard deviations. There's principles that the algorithm follows. There's principles that the algorithm follows. And the thing about standard deviations is something I came to notice. I might have already mentioned this. They speak the language of the algorithm. They align with the algorithm. Levels are, when you project a standard deviation, they're not random in terms of the algorithm is going to respect it. Price is going to respect these standard deviations. It's going to do what it's supposed to do upon engagement with these standard deviations. And it's not necessarily the levels itself. It's the PD arrays that the algorithm prints that it's utilizing. But the standard deviations project the PD arrays out in price. It's essentially like a stabilizer on a bike. We have that engagement with the 15 second. Hold, just be going on tangents yapping, but we have the engagement with the 15 second, deliverance up towards the buy side, and I ultimately looked to collapse my trade off of the true day open because it seemed rather clean in a sense. We had a standard deviation, and this standard deviation, let me actually go back on the M1. This standard deviation is an M1 standard deviation, and the thing about the standard deviation is it's not your point of inception standard deviation. It's your low risk buy standard deviation. And the reason why I'm utilizing the low risk buy standard deviation here is because there is no valid M1 standard deviation that resides here. And that is another thing that also led me to looking to manage the trade the way I managed the trade, because I'm looking for stuff to flow in a very clean manner. And if it doesn't flow in a clean manner, it's not to say that, oh, this trade is done or this trade isn't going to deliver. It just may mean that, okay, we're going to see something like this occur, a consolidation. But there's also other things that can, bring you to the conclusion that the consolidation is going to occur. For example, the overlapping of the key time opening aligned with the high of the new week opening gap PD array. So this is an M1 standard deviation, and it falls short of the true day open being the midnight opening. And as we come and engage with the midnight opening, ES has engaged with this high. We originally had a cracking correlation here, so that is forming the second stage cracking correlation. And once we engaged with the midnight opening, I was more than content enough with what the trade had delivered, so I just collapsed the trade. I wasn't looking to hold the trade for a home run, being all of these highs that reside right here. The only circumstance that I would have done so is if I had taken a partial at this true day opening right here, because for one, it means I would have paid myself. My time has been worthwhile, as well as the fact that then I don't have to manage the trade in terms of observing what price action is doing. I can simply just go on about my day. If it hits stop loss, it hits stop loss. If it hits take profit, it hits take profit. But the circumstances as to why I would have been open to taking a partial and leaving a runner is because on the M5, what we end up taking notice to is that we do have a valid standard deviation. Although the M1 doesn't provide one, the M5 does provide a standard deviation, being from this low all the way up to this high. And what we take a notice to is the -2, -2.5 projects for all of this very, very nice TLP that resides right here. Are we going to engage with it today? I don't know. Quite frankly, I don't care. But the M5 standard deviation is what projects for that. And like I mentioned before, you're looking for the lower time frames to roll out to the higher time frames, displaying the signatures that yes, we're looking to continue this bullish order flow. As I'm looking at price right now, what I am taking notice to is the fact that for one, ES is relatively close to these highs compared to the Nasdaq, as well as YM being relatively close to these highs compared to the Nasdaq. But yeah, so yeah, that is overall it for the trade. Pretty quick, to be quite honest. I guess we can talk about the trade management in terms of the way I manage the stop loss, because the managing of a stop loss is also very important when it comes to a trade. You can either just opt to leave your stop loss where it is the entire trade, or you can just look to move your stop loss to break even when you feel as though price has delivered to a, good length of a degree to your desired direction that you're looking for price to deliver to. But the managing of my stop loss, so I managed my stop loss, I think the first time we managed it was when we presented this cracking correlation right here. So we had price engage with the 9:30 opening, and then we had ES engage with this high right here presenting a cracking correlation. So then I ended up moving my stop loss to break even, and then I ended up moving it to this low right here, because this would engagement with this low, I would look at the trade as if it's invalidated. Reason why being is because right now we're looking at the M1, but on the 15 second, we have that deliverance into that change in state delivery, its respective order block. On the M1, you can also look at this as an order block as well, and we can see how this order block is being utilized in a very efficient manner. Price action is failing to close inside of it multiple series of times. So we have 1, 2, 3, 4, 5 times price action has come, revisited this order block, and failed to close below it. So stop loss simply just being at the low of the order block. If price action is to come and displace down below it, I'd no longer want to be in the trade. And yeah, I'm pretty sure that that is actually it. This was pretty quick. Very thankful for the speed in terms of which it was done. not much yap to it. I'm trying to think if there's anything else that I'm missing. Actually, there is. Yes, this is going to be the last thing. So when we're looking at the 15-minute chart right here, we have the 9:30 candle being right here. And what we take a notice to is that the 9:30 candle ends up coming and delivering into our standard deviation that we had projected from the previous day's price action. And it's not the sole fact that we come and engage with this -4, -4.5. What it actually is the 9:30 candle of itself. The 9:30 candle of its own is a whipsaw candle. When we are looking at the candle by itself, it is a whipsaw candle, meaning that the wicks are larger than the bodies. And when it comes to whipsaw candles, these are actually my favorite types of setups, and they're actually a lot more effective on higher time frames. So 15-minute effective. When you're looking at the hour 1, hour 4, very effective, and then daily, of course, it's going to be very, very effective. But in relation to a whipsaw candle, with narrative in mind and with sound logic being put into the idea that you're looking to frame, in this case, I was looking for buy side delivery. The whipsaw candle, there's just two criterias that it needs to meet, being for one, the candle needs to close relatively close to the opening, and then for two, the wicks need to be larger than the bodies. And if the candle is closing relatively close to the opening, the wicks are obviously going to be larger than the bodies. But in this scenario, we don't close relatively close to the opening, but the wicks are still larger than the bodies. And with the whipsaw candle in motion like this, with the framing of, okay, I'm looking for buy side delivery, we have all of this TLP, I'm looking to see signatures and price action present themselves so that we can begin delivering up towards buy side. What I want to end up seeing is the whipsaw candle low being engaged with, and then a point of inception occurring for price action to then deliver, and then ultimately end up engaging with the whipsaw candle high. So engaging with that 9:30 high would be where you can look to collapse the trade. And if it's a higher time frame narrative that you're unraveling and you're looking to unfold, you can end up holding the trade for a longer period of time. And in this case, it'd be looking for these highs to be engaged with. But what we end up having is that ES actually engages with this whipsaw candle. So that is where I ended up collapsing the trade. We have a cracking correlation with the whipsaw candle that I'm looking to be engaged with, as well as the fact that we have NASDAQ engaging with the midnight openings. So with the knowledge of this occurring, it's more than okay to look to close the trade when we engage with the true day opening, which is what I had essentially done.